Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Coinbase. A lot of interest in Bitcoin over the last few months since the election. This stock, since Coinbase's last earnings at the end of October, Bitcoin's up about 37%, and most of that came, in early November post-election. Maybe a crypto-friendly administration here moving forward. But Coinbase, you've got to expect that maybe the data that you're seeing, does that fully reflect, if it's positive, that, hey, people are getting into this with the expectation that we're going to see more deregulation, and it's going to be that environment that's going to make crypto shine, and that helps Coinbase because they're transacting in it every day?
Yeah, I would say that the deregulatory environment is a double-edged sword for Coinbase. I think it definitely opens up a lot more avenues for growth for the company, a lot broader of an offering that they can make. This is a company that serves as the custodian for 17 out of the 20 approved crypto ETFs. So they're very much involved in the institutional side, which is bound to grow via deregulation. But on the other side, Coinbase actually benefited somewhat from being in a highly regulated environment because they were the only game in town. They had built that kind of regulatory moat around themselves where it was difficult to tell people, if you want to buy these cryptocurrencies outside of an ETF in the U.S., where do you go other than Coinbase? It was a very difficult thing for others to compete with them. Now, as deregulation comes in, I think they're starting to get a little bit more competition. But they're still, Coinbase by far is still the leader. It is still a industry, that is deregulating in real time and is expanding in ways that 4 or 5 years ago no one thought was possible, with the possibility of nation states getting involved in custodying and owning Bitcoin. Coinbase is the leader. They remain the leader. We're bullish on them with a little bit of a caution because the competition is coming.
Andy, here's my question here is pretty simple. If you laid Bitcoin over the chart of Coinbase, it's pretty highly correlated. So if you want to trade this name, do you watch transaction volumes or do you watch the price of Bitcoin and trade it off that? What's the better, in your opinion? You watch this, probably closer than I do. I know for sure. What's the better trigger for you to trade this? Volumes or just the price of Bitcoin?
I think it's price of Bitcoin. I think the price of Bitcoin is what leads to the volumes. So that's the leading indicator of everything. Coinbase definitely benefits from volumes, but also, a rising price of Bitcoin gets more people and, even more importantly, more institutions interested in Bitcoin and in crypto, which they naturally go to Coinbase as the custody, the exchange of first resort. We are a little bit, we see the app engagement growing significantly over the last year. That's the first time since 2021 that we've really seen a nice uptick on consecutive months or quarters in terms of active users of the Coinbase app. And so we're not near those 2021 peaks, which I think is overall bullish for Bitcoin. Retail is not in as heavy as they were before, but Coinbase is still the leader, and they're still executing at a very, very high rate with a CEO and founder that is excellent at what he does.
Yeah, and I think you make a great point here. As crypto and especially Bitcoin becomes more of the norm and competition starts to heat up, remember Coinbase has high fees on their trading platform, and I think it's the highest in the industry. That should come down, and your chart kind of reflected that hey, we saw a jump over the last couple of months just due to the fact that, hey, crypto went to all-time highs and there's a lot more interest in it. Is that the caveat where, hey, we might see blowout earnings from this company, but what about their guidance? Because now crypto and Bitcoin's back below 96K at this point, so maybe some interest waning, maybe transactions waning a little bit as competition heats up, probably at lower fees, right?
Yeah, absolutely. I think that Coinbase is in a situation where they have to give their guidance with a very long-term view, because any guidance in the short term, is actually just a prediction on the price of Bitcoin. And I don't think that they want to go there. So they have to lay out their vision, which is exceptional. I think they have to lay out the fact that they can execute, which they have proven. And then they have to, basically tell the story that it's not if, but when these institutions, these nation states, these high wealth individuals start seeing Bitcoin more and more as digital gold and crypto in general as something that can be a part of the financial ecosystem, fully integrated, rather than this kind of plaything that has been off to the side, this gambling and high volume trading aspect that it has been recently. So I think everything's moving in the right direction for Coinbase. They're going to have a very difficult time saying when the next step jump is going to happen, and that may scare off some investors. Look, last time Coinbase reported earnings, the stock was down 12% the next day, and over the next 2 months, it was up 60%. So Wall Street's still very much trying to figure this one out.
Yeah, and that, as I mentioned, due to the election, presidential election, maybe making it more comfortable for them. But, you mentioned that you've got some bullish sentiment on this one. What would be your earnings score with that caveat that, there might be some concerns down the road for this company?
Yeah, look, I think the most important thing we've learned over the past few weeks, and, you guys do such a great job of telling people about this, you got to be protected to the downside. You got to have risk control on these trades, and you guys can help structure that trade. I think, if anything, I would be bullish going into this earnings event. But again, I think that the downside risk is extreme, like we've seen in a lot of these huge moves on earnings this quarter. You've got to be protected if you're wrong. And so I think there's 65% chance we trade higher after earnings, but the downside risk needs to be protected.
All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down Coinbase for